Hey everyone, and welcome back to ShareTreck's Morning Business Deep Dive. I'm Jack.
Hey.
And I'm here with Diane
Hi, everyone.
to sort of break down some of the top market-moving news you need to know as an investor.
Absolutely.
Today is Saturday, December 7th, 2024.
Wild ride.
So grab your coffee and let's dive in.
Yeah, it's a wild one out there, Jack, and today is no different.
Yeah, for sure.
We've got big tech in the crosshairs, oil prices doing their thing, and the Fed playing a game of economic poker.
Okay, let's unpack all of that. First up, the Department of Justice is reportedly gearing up to sue Google over their dominance in digital advertising.
Yay.
Diane, from an investor's standpoint,
Yeah.
how serious is this?
Yeah.
We know Google's faced antitrust scrutiny before, but what makes this different?
I think what's interesting here is that the DOJ seems to be aiming for structural changes to Google's business model.
Okay.
We're not just talking about fines here.
Right.
They might actually force Google to spin off entire divisions,
Wow.
like their ad management platform. Okay.
That could have a major impact on revenue streams and competition in the entire ad tech space.
So if I'm holding Google stock, this
Yeah.
isn't just a wait-and-see situation.
Exactly. You need to start thinking about the potential ramifications of a breakup.
Okay.
Would a standalone Google ad platform be as profitable?
Right.
How would competitors like The Trade Desk or even Amazon capitalize on this shift?
Wow.
This lawsuit goes way beyond a slap on the wrist.
Yeah.
It could fundamentally reshape the digital advertising landscape.
Got it. So it's something to watch very, very closely.
Yeah.
Now let's shift gears to oil prices,
Okay.
which are climbing again thanks to OPEC plus production cuts and those ongoing geopolitical tensions. Dan, we know energy costs impact everything.
They do.
But where should investors really be focusing their attention?
Yeah.
Is this a short-term blip or a sign of sustained inflation?
This is where it gets really interesting for specific sectors.
Okay.
If you're invested in airlines, for example,
Mm-hmm.
rising fuel costs are going to eat into their margins.
Same goes for logistics companies and manufacturers who rely on transportation. On the flip side, energy companies are obviously benefiting.
Right.
But it's not a uniform playing field even within that sector.
So it's about looking beyond the headlines and understanding
Yeah.
which companies are hedged against these rising costs
Yeah.
and which ones are most vulnerable.
Absolutely. Take a look at a company's earnings reports and see how they're managing their energy exposure.
Okay.
Are they locked into long-term contracts? Are they investing in fuel-efficient technologies?
Wow.
Those are the kinds of details that can reveal whether a company is positioned to weather this storm or get swept away.
Okay, so we've got big tech facing potential disruption, oil prices creating both winners and losers.
Right.
Then there's the Fed, who just hit pause on interest rate hikes,
Yeah.
but hinted that more might be on the horizon. You've got to love that clarity, right? Seriously though, Diane, what's the takeaway for investors trying to decipher
Sure.
the Fed's mixed signals?
Well, the Fed is laser-focused on inflation,
Okay.
but they're also walking a tightrope trying not to tip the economy into a recession.
Yeah.
They're looking at indicators like the Personal Consumption Expenditures Price Index, or PCE, which is their preferred measure of inflation.
Okay.
If PCE continues to rise, the Fed might be forced to hike rates again, even if it risks slowing down growth.
So how does an investor actually translate that into action?
Yeah.
What should we be doing with our portfolios?
This is where diversification becomes crucial.
Okay.
If the Fed does hike rates again, borrowing costs go up, and that can impact corporate profits and stock valuation. You might want to consider shifting some assets to more defensive sectors like consumer staples or healthcare companies that tend to perform well even during economic slowdowns.
Good point.
Yeah.
And speaking of navigating choppy waters,
Mm-hmm.
Tesla just announced another delay
Oh, yeah.
in their Cybertruck production. They're blaming supply chain issues and production challenges. Diane, is this just a bump in the road for Tesla, or does it signal something more concerning?
This delay raises some red flags, especially considering the increasingly competitive EV market.
Okay.
Rivian and Ford are already rolling out their electric trucks,
Right.
and they're not standing still.
Yeah.
Tesla's brand cachet gives them some breathing room, but this delay gives competitors a chance to catch up.
So as an investor, am I right to be a little nervous?
Yeah.
We all know Tesla's stock is volatile, but this seems like it could have a real impact.
It's definitely worth watching closely.
Yeah?
Keep an eye on Tesla's next earnings report and listen carefully to what they say about overcoming these production hurdles
Okay.
and their strategy for competing with rivals.
Right.
Actions speak louder than words in this case. So potentially bad news for Tesla, but on the flip side, we have Microsoft making a massive billion-dollar bet on AI,
Right.
but pouring money into OpenAI, the creators of ChatGPT.
Yeah.
This could be a game changer for the development of AI products and services.
Dianne, help us connect the dots.
Yeah.
Why is Microsoft making this move,
Yeah.
and what are the potential implications for investors?
Microsoft is positioning themselves to be the backbone of the AI revolution.
Okay.
They're not just investing in OpenAI, they're integrating OpenAI's technology across their entire product suite.
Wow.
Imagine using ChatGPT in Word to write documents
Right.
or leveraging its power in Excel for data analysis.
Yeah, so it's not just about developing cool AI products, it's about weaving AI into the fabric of how we already work and live.
Exactly.
Huh.
And that's where Microsoft's vast reach gives them a huge advantage.
Okay.
They have the infrastructure, the customer base, and the resources to bring AI to the masses.
Right.
But it's not a guaranteed win.
Yeah.
OpenAI is notoriously expensive to run,
Right.
and there are ethical and regulatory hurdles that could slow down AI adoption.
Okay, so there's definitely risk involved.
Definitely.
But if this pays off, it could be massive for Microsoft and their investors.
Yeah.
Speaking of AI, it seems like every other day there's a new headline about AI-related stocks soaring.
Yeah, for sure.
NVIDIA, AMD, C3.ai, they're all riding this wave of enthusiasm. Is this sustainable growth, Dianne? Or are we headed for an AI bubble?
That's the million-dollar question, isn't it?
It is.
We're definitely seeing some frothiness in the market.
All right.
Investors are piling into anything with AI in the name without really understanding the underlying business models or the long-term viability of these companies.
So how do we separate the hype from the real opportunities?
Yeah.
What should savvy investors be looking for when evaluating AI-related companies?
Focus on the fundamentals.
Yeah.
Look at their revenue growth, their profitability,
Yeah.
their competitive landscape. Don't just buy into the hype.
Right.
Ask yourself, does this company have a clear path to profitability? Do they have a unique technology or a sustainable competitive advantage?
Solid advice.
Yeah.
Now let's talk about the overall market sentiment.
Okay.
After a strong rally fueled by all this AI optimism, Wall Street seems to be taking a bit of a breather.
Right.
Dianne, is this just a pause for investors to catch their breath? Or is it a sign that the market might be cooling off?
I think the market is trying to find its footing.
Okay.
We've had a lot of good news priced in,
Right.
and now investors are waiting for more concrete evidence that this AI boom will translate into real earnings growth. Upcoming earnings reports from key sectors like retail and consumer discretionary will give us a better sense of whether this optimism is justified.
So we're in a wait-and-see mode with a close eye on those earnings reports.
Exactly.
We also saw a mixed bag of results from some of the tech giants. Microsoft and Alphabet had stellar earnings, while Meta stumbled a bit.
Right.
Dianne, what are the key takeaways for investors from these mixed results?
Yeah.
Are there any surprising trends emerging?
What we're seeing is a divergence in performance within the tech sector.
Okay.
Companies that have diversified revenue streams and a strong presence in cloud computing. Like Microsoft and Alphabet are proving to be more resilient in this uncertain economic environment.
So those companies are sort of the safe haven within tech right now.
They're certainly better positioned than companies that rely heavily on advertising revenue,
Okay.
like Meta. With businesses cutting back on their marketing budgets, those companies are facing headwinds.
Right.
Investors need to be discerning and understand the different drivers of growth within the tech sector.
It's not just a monolithic tech is good or tech is bad story. You have to look deeper.
Exactly.
Well, Dianne, you've given us a lot to think about today.
Of course.
As we wrap up this morning business deep dive,
Yeah.
what are the key takeaways investors should keep in mind as they navigate this complex market landscape?
I think the biggest takeaway is that uncertainty is the name of the game right now.
Okay.
We've got antitrust battles brewing, inflation concerns lingering, and the Fed keeping us on our toes.
Right.
But uncertainty also breeds opportunity.
So how do we, as investors, not just survive, but actually thrive in this environment?
By being informed, doing your due diligence, and not being afraid to ask questions.
Okay.
Don't just follow the herd.
Right.
Understand the forces at play, analyze individual companies carefully, and build a diversified portfolio that aligns with your risk tolerance and long-term goals.
Makes sense. And speaking of doing your due diligence, it's crucial to remember that everything we've discussed today represents our personal opinions and analysis
Exactly.
based on the current market conditions.
This is not financial advice. It's meant to be a starting point for your own research.
Right.
Every investor's situation is unique, And it's essential to consult with a qualified financial advisor before making any investment decisions.
Absolutely.
Yeah,
We just aim to spark informed conversations and provide food for thought.
for sure.
So to all our listeners out there, we want to hear from you.
Yes.
What are your thoughts on the current market trends? What sectors are you most interested in?
Yeah.
Leave a comment below, hit that like button, and subscribe to our channel for more deep dives into the world of business and finance. Your support helps us grow and reach a wider audience.
Thanks for joining us, Jack. Always a pleasure to break down these complex topics with you.
And to all our listeners, until next time, happy investing.
Bye, everyone.
Bye.